Shocking, right? The market looks unstoppable right now, but here's the catch. It's only a matter of time before it crashes. Everywhere you look, you're hearing it. The market's strong, valuations are soaring, and everyone seems to be making money. But the truth is, the last 100 years of market data tell a very different story. And here's the kicker. Most people lose their retirement savings, not during the crash, but in the months leading up to it. What's worse? The exact signs we're seeing right now are eerily familiar to the moments just before every major market collapse in history, 1929, 2000, 2008, and even 2021. The question is, are you prepared? Are you going to be one of the few who saw this coming, or will you be left holding the bag, watching your life's work disappear in an instant? Stick around, because in this video, you'll discover the secret pattern that will save your retirement. Let's break this down. The signs are right in front of us, just like they've been in every market top for the past 100 years. But most investors are too blinded by optimism to see it. Right now, we're in the exact stage of the market that we saw in 1929, 2000, and 2008, just before the crash. Every single time, investors felt the same: invincible, untouchable. They thought the market would keep going up forever. They didn't see the crash coming. And by the time they did, it was too late. Now, here's where it gets interesting. There's a pattern that repeats itself every time, predictable, consistent, and deadly for anyone who doesn't spot it. The problem? The majority of retail investors are loading up on riskier assets right now, completely unaware of the danger. The big players, they're already positioning themselves. They know the pattern. But here's the thing. You don't have to be left behind. You can spot these warning signs early and protect yourself. The question is, are you going to stay in the dark, or will you take control before the crash hits? Stay with me, because in the next few minutes, you'll learn how to read the signals like the pros. Let me hit you with a hard truth. Most investors don't know what's coming next. They're riding the wave of a bull market, convinced that it'll last forever. But here's the reality. The market is on the brink of a major collapse. And I'm not just throwing this out there for drama. I've studied every major market top since 1929, and the signs are unmistakable. Right now, the S&P 500 is showing us a picture that's eerily similar to past market tops, and it's not pretty. The CAPE ratio, for example, is at levels we've only seen twice before, 1929 and 2000. Both of those times, the market crashed by over 75%. But here's the kicker. You're not hearing about it on the news. Nobody's talking about the warning signs. Why? Because right now, the market is still riding high and everyone feels good. Everyone's making money. But here's what's missing from the conversation. The same exact signs that were present before every major crash are flashing right now. The big institutions are already preparing for the fallout. They see the pattern. The question is, will you? Are you ready to face the reality of what's coming? If you're not paying attention to these indicators, you're setting yourself up to lose big. But don't panic just yet. There's a way out. Stick with me, and I'll show you how to read the signals that most investors completely miss. Now, let's talk escalation. The situation is already intensifying. This isn't just some small hiccup in the market. This is the beginning of something bigger. Think back to 1929. The market looked healthy. Everything seemed fine until it wasn't. Investors were feeling invincible. The news was all positive, and stocks just kept going up. Sound familiar? Fast forward to 2000, and the exact same thing happened. The signs were all there, but nobody wanted to see them. The market kept climbing, and people ignored the red flags. By the time the crash hit, it was too late. The crash wiped out 75% of the market, and it took decades for people to recover. And now, here we are again. History repeating itself. Here's the issue. We've normalized things that we shouldn't. A market that keeps climbing without a correction, that's not sustainable. Valuations are at extreme highs right now. The big institutions know it, and they're getting out while they can. But retail investors, they're piling in, believing that the good times will last forever. It's exactly what happened in 2000 and 2008. Only this time, we're looking at another bubble. The question is, are you going to be the one left holding the bag when it pops? Let me show you why this time it's even more dangerous than before. Now let's dive deeper into the real evidence. This is where it gets disturbing. You've heard about the pattern, but here's the hard proof that will change how you view the market. The Buffett indicator, it's sitting at an alarming 200%, the highest it's ever been. This is the moment when most people think the market is going to keep climbing. But history tells a different story. Back in 2000, the Buffett indicator hit similar levels, and we all know what happened next. The crash of the century. The S&P 500 plummeted by 50%, and it took years to recover. So why is nobody talking about this right now? Here's the contradiction. We're seeing insane levels of optimism, yet the smart money is already selling. Meanwhile, retail investors are pouring in, thinking they're getting in on a hot streak. But let me tell you, they're buying at the worst possible time. The big institutions, they're getting out while they still can. They've seen this pattern before. And here's the kicker. You can see it too, but only if you know what to look for. The truth is the market is incredibly overstretched right now. The big players are already adjusting their portfolios, while the average investor is still riding high on overconfidence. The key question, are you going to wait until it's too late, or are you going to take action now and protect your wealth? Things are moving fast, the pressure is mounting, and the cracks are starting to show. Just when you thought the market was invincible, multiple warning signs are stacking up, one after the other. First, it was the peak valuations, then the narrowing market breadth. Only a few stocks are holding everything up. But now we're seeing a few more developments that are hard to ignore. Retail investors are flooding into riskier assets, thinking they're going to get rich quick while the institutions are pulling out. And on top of that, we're seeing a massive surge in zero-day options trading, more volume than we've ever seen before. The big players are shifting their positions, the insiders are selling, and the public is buying in. What happens when this continues? A massive imbalance. When the market crashes, it's going to be a stampede. The panic will be everywhere, and it's going to hit retail investors hardest. They're the ones left exposed, the ones who ignored the signs and got in too late. So, what's your move? Do you stay in the game, hoping it will keep going up? Or do you start shifting your strategy before it's too late? This is the moment where everything starts to flip. The question is, will you be ready when it happens? Now let's bring this back to you. You're probably wondering, how does this affect me? Well, this isn't just a theoretical exercise. The truth is, this isn't just about numbers on a screen. This is about real people. People like you, who are about to see their financial futures wiped out. You see, when the crash hits, it's going to affect the average person more than anyone else. Sure, the big institutions will weather the storm, but you? You'll be watching everything you've worked for slip away because you didn't see the signs. Think about the people who got caught in 2008. Friends, family, neighbors, people who thought they were set for life until one day the market took it all away. It was devastating. It wasn't just about losing money. It was about delaying retirements, changing lifestyles, and watching years of hard work go down the drain. It's happening again right now. If this feels familiar, if you're starting to realize that you might be on the same path as those investors who lost everything, say so in the comments. Because you're not alone in this, and there's still time to protect yourself. But you have to act now. The question is, do you want to be part of the next wave of investors who face the music too late, or are you going to take control before it happens? Now, let's take a step back and look at the bigger picture. The real question isn't why the market keeps doing this, it's how the system allows it to happen. The big players, the institutions, they know exactly how to profit off this pattern. They understand the game better than anyone. They know how to use leverage, fear, and even the spectacle of the market to their advantage. The market isn't just about stocks going up or down. It's about controlling the flow of money and information. Take a moment to think about the incentives at play here. The media, they're part of the machine, pumping out optimistic stories to keep the public buying in. The financial institutions, they're setting up for the crash, positioning themselves to profit from the chaos. The system is built on the belief that things will always keep moving upward. That's what keeps the retail investor buying, and that's exactly what the big guys need to make their money. Here's the unsettling truth. The system is designed to fail the average investor. The market is rigged in a way that only benefits those who know how to play it. The retail investors are the ones left holding the bag, while the big players profit off their losses. This isn't a coincidence. It's how the system is built. And that's why you need to be smarter than the average investor. You need to understand the system to beat it. So what happens when you understand this? You take back control, you stop being a pawn, and start playing the game to your advantage. So what have we learned? The market works in predictable stages. It follows a pattern, and if you've been paying attention, you now know exactly where we are in that pattern. We're nearing the top. The signs are all there, the extreme valuations, the narrowing market breadth, the flood of retail investors piling in. This is the euphoria stage, the high before the crash, and history tells us that this stage ends in disaster. The big players are already getting out, and it's only a matter of time before the crash hits. But here's the thing, it doesn't have to be your disaster. You can protect your wealth. You can make strategic moves that will position you to weather the storm. The key is recognizing the signs early, knowing when to take profits, when to get defensive, and most importantly, when to stop buying into the hype. The best investors aren't the ones who buy at the top. They're the ones who know when to sell and when to shift gears. But here's the final twist. We're on the verge of an opportunity. 2026 could be a year of incredible gains for those who know how to play it right. The tax cuts, the new Fed policies, the AI boom, they're all going to push the market up. But those who are prepared for the eventual crash, who see the pattern unfolding, will be the ones who come out ahead. The question is, what kind of investor do you want to be? The one who holds on too long and gets burned, or the one who sees the signs and positions themselves for the future? If you're ready to make the smart move, subscribe and stay tuned for more deep analysis on how to navigate the market and make your next moves count. We've only scratched the surface. The real opportunity is ahead, but you need to be prepared. Don't miss it.